People, or I should say people that chase stocks, loves perfect textbook patterns. And guess what? They fail all the time. My favorite type of pattern. Hi guys, this is Forte. Today is a chart idea video, and the chart, the ticker I like to introduce to you guys is CARG, CARG Guru, CARG. It's a car website selling company, and what I want to show you guys is the basically how this chart works. I'm gonna explain it in on the weekly chart, so it's easier for guys to see. Now try to ignore all the lines if you can. These are moving averages, which right now we don't care. And let's explain. I'm gonna break this card down. I mean, not this card down. This chart down. Okay. So this stock IPO'd around 2000. I think the late 2000, late 2017. The stock got going. People bought it. People chased it. It came down. Got going again. Came back down again. Got going again. And then it sold off ferociously. It sold all the way down. Like it lost 64% from the total high. The stock actually is now 75% basically. And now this formed basically a lot of potential supports and potential resistance, ahead of the stock. We can see that around this area, the stock rally up from here to here, right? From I think it was $14 to $32. And I am going to draw this line right here. This is where potential, there might be potential, this might become potential resistance, right? Where potentially sellers could show up. And we don't know that until after the fact. So that's what we do to study charts. We want to look at them and see, is this resistance or is it not? It is, because right here we can see that the stock sold off literally the week off when it broke that basically area. It sold off and then came all the way down to $18 from $31, right? That's a big sell off. And then the stock came back up again late in 2020. And then the stock consolidated right here. This time it took a bit longer for the sell off to happen, right? How do you want to read this? Basically, now that we know that this area, right, is acting as resistance again, because after the fact we're here today. This is where we are today. So we know that this happened. But how long did it take? So the stock actually stayed there for a while. So you can see that as people that bought around this area, right, wanting to break even on their shares, right? They want to break even. Or maybe people they chase here, they're like, oh, the stock finally came back up to here, so let's sell some. So people are selling it, right? They're breaking even. And perhaps this is where the stock might break up. We can see this red candle actually try to break up above. But then, it wasn't strong enough, right? When do you think when do I think it's strong enough? When it gets tighter and tighter. Why? Because when the range of the base gets tighter and tighter, it means that sellers are getting dried out basically. And in this case, this is an improper, it's a really faulty base. And we retrace all the way down 15% retracement in this base. It's not a good base at all, right? So sellers are not getting dried up, and the people that bought that chase, they think this is a breakout. Obviously, got trapped in, and got sold off ferociously again. And then the stock entered this little stage 1 consolidation again, and it's coming back up right now, right? And now this is where we want to focus. This is recent date. This is 6 weeks ago. And now we can look at the daily chart. I'm going to draw these levels here for you guys, right? This is the first one, second one. Now, how do I know why do I draw it there? It's because of this happened. And that's really all we need to care about. So we can see that after so many times of people breaking even, selling off and stuff, we're now back to here. This might be confusing to regular people because they're like, Forte, how do you trade this? There's no pattern. Like, how do you trade? You don't look at pattern. You want to see what happened recently, right? On the weekly chart, we want to focus on this sell-off right here, right? This sell-off is actually really important. On the daily chart, it's actually this right there. It's this, right? This time, the stock broke up try to basically, or actually no, it's not that one, my bad, it's this one. Okay, it's this one. The stock came rally all the way from $24 to 31, and again, it didn't work. We sold off, and this most likely, in my opinion, isn't the people that from from the past 2 years ago. I think people from here are done breaking even from here and here, right? Now, if the stock were to rally, we have to see the people break even from this area, like people that bought on this high. Now they want to break even on this stock because they're like, oh, we got trapped. The stock fell 34% after we bought it. Fuck, like I don't want to sell it with a loss. That's the psychology of the chart. So now people want to break even from this area. Now it's really simple. The stock came to that area, where it used to be, right there, and it sold off all the way below the 20-day, 50-day, and the 200-day moving average, which is on the chart, these three lines, right? And then this time, the buyers show up really quickly, so higher than this high right here. So this is a textbook higher low, right? This is why higher lows are important. Sellers quickly show up and bought the stock up all the way above all the three major important moving averages. And immediately, once again, we're met with another sell-off at this area, which is basically people here. They're not done liquidating it yet, right? But this time, the stock only pulled back 8%. That's another higher low, right? What I'm trying to say is that it's getting tighter and tighter without forming like those textbook bases, for example, like this right here, right? It's none of that. It's just the science of the chart. We look at it, it's only, retrace 9%, immediately buyers show up, this time at the 20-day moving average, right? So the major moving average is now acting as a support. That's a good sign. That means buyers are getting stronger, and that's all there is to it. Now the stock got up. We had a quick little daily retracement of a 3%. Immediately after the stock squatted, insane, the second day recovered all of it. And the very next day, which is today, this happened, bottoming tail. Now this might be bad. This might look really, really bad for the stock, right? Oh man, like after recovery, the stock came all the way down again, But this is where we use intraday multiple time frame analysis. We're gonna go to the 15-minute chart and see what actually happened. What actually happened is that it was simply just a shakeout. That was it. It was a shakeout. CARC had a shakeout. And a shakeout usually isn't anything important. It's a good thing where they shake weak hands out. So people that bought here, shake them out. And then, or if they have their stop tight, they will just shake them out. And then usually this is when the stock gets going, right? So I like this one, a buy above right here. Let's take a look at the pre-market. I like to buy this one above that high, and we don't need to, we can have a tight stop in my opinion. We don't need to use the, that one over there. And I'm going to buy this one tomorrow if it doesn't gap. And that's my analysis. Thank you guys for watching. And if you guys like these type of deep technical analysis videos, chart videos, tell me about it in the comments section. So I know, because I don't know what you guys like. Subscribe to the channel. It helps a lot because it motivates me to make videos. It doesn't produce any money basically. It's monetized because we're partnered with YouTube and stuff, right? But guys, you guys know I don't make money. I'm not a big fan. I'll literally donate every single cent I make from YouTube. I only want to make money from trading. That's it. And follow me on Twitter at twitter.com/ForteCharts. Thank you guys for watching, and have a good night.